Sir Isaac Newton really had it figured out when he said something in motion will stay in motion until something with equal and opposite force pushes against it. And I think a lot what we see in price charts is one of Newton's first laws. And so I like to look at weekly charts, to zoom out and look at 5 or 10 years of a price chart to see which direction it's going, which path does it want to go, not which path do we think it should go. And in that path that it's moving, is there resistance? Is there support? Is there reason to have corrections? And so what I want to do with you is share with you a handful of price charts with kind of the big step back and look at really where the path of least resistance is and what we can learn from it today. Hey everybody, this is RC Peck, and this is my weekend podcast. And my theme for this weekend is the path of least resistance is. We're going to look at a couple different assets or sectors and see what the price charts are telling us by taking a big step back and looking at them. So the first one we're going to look at is the SP 500. This price chart is from present day back to the very, very end of 2004. And of course, the brain immediately sees that huge 58% fall between 2007 to the beginning of 2009. But most importantly, today, what is the price chart telling us? What is the S&P telling us? And what it's telling us is the path of least resistance is still up. We may not believe it can go higher or it should go higher, but the fact is it is going higher. Japan is printing money. We have stopped printing money in the US, and Europe will figure out somehow to print money, so will China. So money printing is here to stay for now. It's just not coming from the Fed. And some of that money printing will go into the S&P 500 as it has been doing. So the path of least resistance for the S&P is still up. The next one I want to look at is the US dollar. Now, if you look at this, your brain should kind of go sideways, confusion, I don't know. But what's of most interest to me is those two horizontal lines where the dollar stopped going up in 2008 and 2009 and 2010. And you can see that, I'll just put my little cursor there. There was the 08, there was the 09, there's the 010. And here we are today in 2014. So now the question is it going to take a break here and correct back down? Even if it's going to go up longer term, which we don't know, there's some significant resistance here, 2010, 2009, 2008. And even if it did break up, we have some significant resistance up here. So we know the US dollar has made a huge move from about 78 to 88. That's a pretty big move. And now it's hitting resistance. It could move up a little bit more into this, but the question is, first of all, what is the path of least resistance? The answer is, I don't know. I mean, clearly it's been up, but now it's hitting a major resistance point. So we have to kind of take that into account. And most likely than not, it's going to take a breather because of this huge move up it did. But as you can tell, the US dollar has these big moves up, big moves down, up, down, up, down. And so having those moves is not that unusual for the US dollar. Even though it's not typical, it's not, we can see here in this price chart of 9 or 10 years that it does happen. So the path of least resistance right now for the dollar is really hesitating to see if it bounces off this. Statistics say it probably will. Probability says it probably will. It has held 3 times in the past. Even if it breaks higher, it will probably have a resistance or a pause here. The next price chart we're looking at is the 10-year Treasury Yield, and this is the 10-year Treasury Yield of U.S. bonds. So what you're seeing here is the actual yield that the U.S. will pay bondholders when they give them, when people give money to the U.S. for 10 years. And when I look at this, it looks like a question mark. It's been falling since 2006, but since 2012, it's been rising. So we're getting this consolidation, and it will not consolidate forever. Eventually, it's going to have to either break down and test those 2012 lows or break above the 2013 highs. And the answer is we don't know right now. We don't know which way it's going to break. Now, what we do know is Treasury yields in Europe are much lower. Treasury yields in Japan are much, much lower. Treasury yields in Germany are much, much lower. Basically, the only major developed country in the world that has similar 10-year Treasury yields as the U.S. is Great Britain. And Great Britain is a much, much smaller country with a much smaller bond market. So as far as developed countries, really, the U.S. has the highest yielding 10-year Treasury. And actually, the UK 10 years is yielding slightly lower than the US. And as far as currencies go, the US has the uptrending currency right now. So it is still one of the better places to put your money if you want to put your money in government-backed debt. Relatively speaking, it is still outshining the rest of the developed world in what it's yielding and what its underlying currency is doing. But like this chart says, there's a big question mark. We do not know which way it's going to go, and so we're going to have to watch this for its breakout. The next price chart is oil. Now, I have 4 lines on here. 3 of them are parallel and horizontal, and one of them is angling higher. So let's start with the 3 parallel lines. And basically, oil has been moving or in a channel since 2010. 1, 2, 3, 4. This is its 5th year of going sideways. And oil basically is bouncing between $75 a barrel and $110 a barrel over the last 5 years. And as you can see at the end of the chart, oil has fallen basically from 108 down to about 78. The question, of course, is now what? Because we don't know, because there's a lot of support right here to support this $75, $78 barrel of oil, and there's a lot of resistance at the 110. And we are in this channel. Now, I put this angled line here because this is its long-term upward trending price. It hit right back here in end of 08, beginning of 09, and this right here today at the end of the chart is about $65. So there is a bottom price or support of about $65 a barrel, which is only about $13 away. As you can see from this price chart, oil can be very, very volatile. Oil is the most traded commodity on this planet, but we have some resistance, or oil has some resistance to the downside before it hits 65. And again, I'm not saying it's going to hit 65, but really the only thing I see below this from a major point of view is oil at about 65. But right now, it's got some support to stop its fall, and this has also been a pretty big fall over the last couple months. So where is the path of least resistance for oil? Short term, it's got some support at this price. Longer term, it is absolutely in a sideways trending channel, which means it's a big question mark. So we'll watch to see if this support holds, and then acquire our ideas or our opinions from that. Now, I will say inflation and oil are very closely related. So when you see oil fall, you're seeing inflation fall too. And that makes sense because energy is a big input in a lot of businesses. So right now, inflation is falling, deflation or disinflation is going down, and deflation is still the concern of the major central banks in the world, which means they're going to keep easy monetary policy, which basically means they're going to keep interest rates low or negative, and they're going to find ways to print money. The last price chart I want to show you is gold. If you look at this price chart starting from the beginning of 2005, it clearly was up until September of 2011, and since then, the last 3 years, it has been trending down. I put one horizontal line on here. That line is at $1,000. Now, yes, it happens to be $1,000, but the other thing that I thought was very important about $1,000 gold is so much resistance here in 2008, 2009, just could not get above that $1,000, and that was huge resistance, and once it broke it, it just took off to the upside. And what we have here, the path of least resistance for gold, even though it's been up the last couple of days, is still down. The biggest thing we want to watch on gold is if it does move up, what happens when it gets back to that 1180-ish price mark? Does it bounce off it and continue down, or does it move up through it? My inclination and my belief is gold will fall until $1,000. Now, this is a bit of a prediction, and predictions are worth, whatever they're worth. Now, the reason I say that is because if in fact deflation is taking hold in Japan and in Europe and in China and in the US, that means the central banks will do everything in their power, or maybe even outside of their power, to print more currency units. And when that happens, those currency units, they move into the stock market. And the only thing that moves gold up or down is someone's change of concern about the future. If they're not concerned as much as they were about the future, gold falls. If they're more concerned about the future than they were last week, gold goes up. So right now, even if it's because of money printing, the concern that people have about the future from a kind of a global perspective is actually falling, and we can see that with gold. So we'll continue to watch this. I'll continue to watch this to see how it bounces off that 1180 if it makes it back up there. And of course, if it does make it down to $1,000, which right now that looks like the direction it wants to go, then that will be a significant buying opportunity for all of us. The takeaway is, the big picture, really stepping back and looking at a 5 or 10 year chart can really give us a better understanding of what's happening. Because this is money, because this is our money, because we have lost money in the past, or because you are down maybe with gold or oil or another position, it is very, very, very difficult for the human brain to actually be objective and step back and go, well, what is the path of least resistance? And right now what we can do is look at very long dated price charts and have them answer that question. Hey guys, I'm glad you're here, and this is really just another step in helping you secure your future, your portfolio, and your life. Until next time, this is RC Peck.